could Tesla be on the verge of making a crazy exit from the public market? Finance guru Ross Gerber deciphers the signs pointing to a positive private horizon for Tesla, and its revelation could send tremors through Wall Street.
Tesla a lot in continuing its dominant position in EV business, but worrying about a couple of 100,000 cars, this, that, this is a company that went from selling 100,000 cars a year 5 or 6 years ago to now almost 2 million and on track to, continue to grow at a 40-50% rate. So that's Tesla.
It's a fair point.
Elon is someone who wears his heart on his sleeve. He's not scripted. He goes in however he feels. You can hear it in the conference call, and that was yesterday.
Right. Okay. What did you think about this, Steve Wesley? First, tell me, do you think that Tesla's a buy at 220? And tell me what you thought about the report.
Look, long term, I think Tesla's absolutely a buy. No doubt they had a slow quarter in Q3, but people expected that. Tesla had been very forthcoming. They were going to slow down a lot of their facilities as they retooled to make them more efficient, and also to give the Tesla Model 3 a much needed facelift with the new Highland coming out. But at the end of the day, I think they're going to come roaring back in Q4. What people don't realize is Tesla's taken the cost down.
Ross Gerber just made an eye-opening prediction that Tesla will go private and ultimately shake Wall Street in just 2 years. Tesla is one of the most influential companies in the EV and renewable energy sectors, and has periodically teased the idea of going private. While it remains a speculative notion, according to Ross Gerber, the potential transition to a private company does have its merits, and it could reshape the future of Tesla. Today we're going to delve into the possibilities of Tesla going private and the many benefits that it could bring. So without any further delay, let's get started.
Time for the 360 round, all about Tesla. We got the latest earnings report. There are concerns about the margins that the company's making, and a whole lot more to discuss. Hatem Dieb's with us, managing partner Gerber Kawasaki Wealth and Investment Management, and Steve Wesley, founder managing partner of the Wesley Group, who used to sit on the board of Tesla. Thank you both for being with us. So, Hatem, I'll start with you. And, I'd like to just first say, is this company a buy? Would you say buy the stock? It's at 220 today. Before we get into the nitty-gritty and all the details, I just want people to know right away what your thoughts are. Would you buy the stock today at 220, Hatem?
If you believe in the long-term future of Tesla, absolutely. I think they're going through a tough time right now with the Cybertruck ramp. But ultimately, what Tesla is trying to do is so revolutionary, it's so different from any other car company. And I think they will succeed. So you want to take opportunities like this when the stock is down, and really, if you don't have a position, maybe take one.
Yeah. So what did you think about the report, Hatem? I mean, what jumped out at you? You said it's a tough time and it was somewhat baked in. Why?
Honestly, it was depressing. I think Elon sounded tired. He sounded deflated. There's a lot going on with the Cybertruck ramp, it sounds like. They're going through a tough time. I think he, maybe distracted a little bit about what's going on Twitter.
Tesla CEO Elon Musk publicly discussed the idea of taking the company private in the past. In 2018, he tweeted about considering a buyout of $420 per share, sparking a brief but highly publicized whirlwind of speculation and scrutiny from the authority that regulate the markets. Ultimately, the idea was abandoned, but it did leave many wondering whether or not it will resurface in the future. So could this be the moment where Tesla takes that very crucial move to change the dynamics of its business? Let's keep watching to find out. Hey guys, welcome back to Tesla Tomorrow. The possibility of Tesla going private is tantalizing, and it's a pretty good prospect with the potential to reshape the company's future. It offers various benefits such as freedom of short market pressures and enhanced decision-making agility. Tesla bull Ross Gerber emphasized that going private could shield Tesla from the short-term market volatility and the pressures of meeting quarterly expectations. Usually, publicly traded companies often face intense scrutiny from shareholders and analysts, making it challenging to focus on long-term strategic goals. But Tesla can bypass this if it does eventually go private. So what are the other benefits that are there with this move? And how will this be a particularly good thing for Tesla stock and the investors? Let's find out, but before we do, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. As we mentioned earlier, going private would liberate Tesla from the constant scrutiny and pressure of quarterly financial reporting, allowing the company to focus on long-term strategic goals and innovation without the constraints of short-term price fluctuations with the stock. Publicly traded companies face a slew of regulatory and compliance burdens, meaning that going private would ease these regulatory pressures, reducing the administrative burden on Tesla and thus allow it to redirect resources towards R&D. Likewise, privatization could allow Tesla to focus more on its long-term vision without the distractions of short-term price fluctuations. This move might also better align with Tesla's ambitious goals of revolutionizing the automotive and building sustainable energy sectors in the industry too. Going private could afford Tesla and its leadership, including Elon Musk, greater control over the company's direction and operations. This is because privately held companies can make better strategic decisions quicker, with a greater degree of confidentiality, and it could become a significant advantage in the fast-moving and competitive EV industry. Companies that are publicly traded often face pressures from activist investors, who may advocate for challenges that are not aligned with the company's long-term vision. Therefore, going private could shield Tesla from such influences. Tesla could also secure ample capital for its growth and innovation endeavors, with backing from private investors or institutional funding without the constant pressure of pleasing public investors. So, what effect could this possibly have on Tesla's stock in the long term? First up, going can shield Tesla stock from short-term market fluctuations and speculative trading. The automaker can then focus on long-term strategies without day-to-day price swings influenced by market sentiment. Similarly, privatization will provide Tesla's leadership with a greater form of flexibility and freedom in decision-making, allowing them to make strategic choices without being unduly influenced by short-term market reactions. As a private company, Tesla would not need to meet quarterly reporting requirements imposed on public companies, and that alleviates the burden of short-term performance expectations, allowing for a longer-term focus. While Tesla's status as a public company does increase its profile among investors, and it does attract coverage from financial analysts, going private would mean a more efficient execution of strategic plans and innovation. It would also help Tesla avoid market rumors and speculation that can impact stock prices, as well as reduce regulatory and compliance burdens, which can also lead to cost savings and more streamlined operation, ultimately benefiting shareholders. Tesla is arguably the most shorted stock across the world. The short sellers believe that Tesla is needlessly overvalued and hence want to drive the valuation down. Some are even of the opinion that Tesla is a bubble and it will eventually go down to zero. Dealing with short-term sellers has become a daily activity for Tesla, and this is not a healthy environment for a company to operate in. Hence, going private does actually make quite a bit of sense. Tesla is known for its ambitious projects, from electric cars to space exploration, and privatization would allow the company to continue experimenting with bold innovations without constant scrutiny from shareholders. Tesla will gain more opportunities to raise significant capital through the sale of shares, and the infusion of these funds can then be used to research, development, and then expand on all their current ideas with great innovation, driving the company's valuation and growth. No doubt there will be some clear advantages to going private, but there are some challenges that investors must be aware of. For instance, funding a buyout and managing the transition process can be a very complex one. Additionally, Tesla will need to ensure that all shareholders are treated fairly and that its mission to accelerate the world's transition to sustainable energy is not compromised. All in all, though, this does seem like a pretty good benefit for Tesla, and privatization clearly outweighs the cost of the cons associated with it. And if the automaker does successfully pull it off, then it could be an absolute game changer. As of now, it remains speculative whether or not Tesla will go private. However, Elon Musk's track record of thinking outside the box does seem to suggest that it could resurface as a concept in this ever-evolving landscape of Tesla and the EV industry. We believe that this move, if it does become a reality, would undoubtedly be a monumentous one with a far-reaching implication for Tesla and the future of sustainable transportation. But what do you think? Can Tesla make the move to go private? Let us know down below, and let us know what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.